Hello students, in today's class I will explain how BRS is prepared as per the cash book. In this sum, you have to keep three things in your mind. So, in case of debit balance as per cash book, so this cash book is maintained by company, right? So, whatever the business owns is an asset. Okay, asset always show debit balance. This thing you have to keep in your mind. Okay, and other two important things, by knowing only these two things you can solve the problem under cash book. Okay, so just keep this in your mind. If passbook balance, that is bank balance, if it increases, you have to put, that is you have to put all the items under add, that is if a bank balance or a passbook increases, you have to add that items. Okay, in case passbook or bank balance that decreases, you have to minus that items. These two things you have to keep in mind to solve a problem. Clear? To the problem. So here, prepared BRS as on 31st March 2025. Okay, so here the debit balance as per the cash book is 18,000. So this 18,000 is a balance we have in our cash book. Okay, now the second transaction is checks deposited but not yet collected. What happened here? Check has been deposited into bank, but still the bank has not collected it. So the bank account is not increased, right? So it is minus. We have to put this transaction under minus. Next, the next item is checks issued but not yet presented, rupees 3,000. What happened here? Check has been issued, that is you gave a check. Okay, the person has not yet deposited in the bank. So here the money is still the same in the bank account. So it has not reduced. That's the reason the account, this transaction item you have to put under add item. Under add. Next transaction is bank charges debited by bank rupees 300 rupees. That means your bank has deducted 300 rupees automatically from your account. What happened here? Bank balance has been reduced, right? If it is reduced, we have to put this transaction under minus. Next, the next transaction is interest allowed by bank rupees 700. What do you mean by this interest allowed by a bank? It's nothing but here the bank has credited or added some money, that is added the 700 rupees. What happened here? Now the bank balance has been increased, so you have to put this item under add. Okay, and the last transaction is here the checks paid into bank but omitted to be entered in the cash book rupees 1,000. That means here the bank, here the check already have been, that is the bank already received a money. Okay, so what happened here? Bank account has been increased, but here the cash book, still the cash book they have missed to record it. Okay, so what is the rule you have to keep in mind? If passbook, if that is the bank balance increase, you have to add, and if the bank balance decrease, you have to put the transaction under this minus. Okay, so dear student, I hope you got an idea how to solve this cash book now. So you can see the answer, right? So what we have done here, debit balance as per cash book, we have written an 18,000 amount. And next, what are the add items? That is check issued but not yet presented, 3,000 rupees. Interest allowed by bank, 700 rupees. Checks paid into bank but omitted in cash book, 1,000 rupees. So total is 4,700. By adding 18,000 plus 4,700, we got 22,700. For this, what we have to do? We have to less the transaction, other remaining transaction. That is checks deposit but not yet collected, 2,500. And bank charges debited by bank, that is rupees 300. The total 2,800. So from 22,700, we have deducted 2,800. So we got credit balance as per passbook 19,900.